Guys, it's your boy Stephen Shakes, and we are so big. We are so big. So, guys, I know it's been a while ever since I dropped a video. The last one I dropped was probably in December. But yeah, I didn't take a break from trading. I only took a break from YouTube. Had a lot going on, school things and all that. I just had to lock in, make sure that I'm sorted on the other side of my life. And yeah, so now that I'm done with whatever I was doing, I can focus on YouTube. I can make time to record videos, edit, and guys, just give you good content. I'm sorry, but yeah. So without wasting any time, today I want us to talk about just market structure and also wanted to show you some analysis, some page that I was watching. So if we can just go right into it and show you guys what I've been looking at. I've been observing the markets. I just feel like I need to share this with you guys. So let's firstly start off with Euro AUD. I'm gonna put this in full screen mode and just show you something. I just want to show you something. Let me delete everything. Hold on. Yeah, I think it's GBP AUD. Let me just delete everything. So you can see I'm gonna give a quick short market breakdown from the higher time frame. I'm only going to start from the let me start from the weekly so I show you what exactly I was seeing. So as you can see, with structure like this, we connected these highs, we also connected these lows. So you see these are larger pattern on the weekly, and as you can see, this is our push down. This is our push down, and this is just correction. This is our larger correction to actually start going down, and we sell at the third touch. Okay, so let me just show you what is going on. So if you drop to the 4 hour time frame, I'm going to skip the 1 hour, the daily. Skip to the 4 hour time frame, you'll notice that when we tapped this third touch, this was a third touch. When we tap the third touch here, hold on, let me just make it a little bit smaller. We tap the third touch. We got a push down impulse correction. Let me use this push down impulse correction, impulse, and correction, impulse up, impulse down, correction, impulse, and then it has been correcting, impulsing all the way down. As you can see, we've been in a downtrend. So I just wanted to make it clear for you guys so you can see it. So you can see it clearly. So we are gonna start from here because this was a little bit messy, more on the advanced side of trading. I'm not gonna show you guys, not gonna go too deep within this here, whatever was happening here, but it was also obvious this was a push down and then a larger correction for us to get an impulse all the way down here. So let's go to the no, let's just go here. Let's just do this. Let's just do this. So as you can see, we've been getting impulse, correction, impulse, correction, impulse, correction, impulse, correction, impulse, correction, impulse, correction, impulse, you know, correction here, and then start correcting. So you see, in this long move, we could have gotten some good entries. Could gotten some good entries, some good sales actually to capitalize on this downtrend. So let's go to the 1 hour time frame. So I show you. Mind you, this video is gonna be so quick because it's unplanned. I just felt like I needed to give you guys something because it has been a while. It's been a while, so yeah. So we have this pattern here. What else do we have? We have volume build here. We have a pattern here. We have another pattern here. It's not my first time talking about such things on this channel. So if you feel like you're lost, just look at the previous videos that I dropped. Then we have another pattern here. Patterns, corrections, most patterns are in forms of correction, but lately the market has been changing. Correction won't be a pattern anymore, it will be imperfect. See, you gotta find perfect within the imperfect, and just connecting the highs and lows. You see, very easy. These are the lows, and the third touch we sell, the third touch we sell, third touch we sell. Guys, and yeah, another pattern here. But I'll say something about this pattern. We have another. Yeah, let's make this a pattern too. We have another pattern here, and then we have volume here. You can call this volume, call it whatever. So you see, so we could have gotten an entry here. If you go to the 15-minute time frame, you would see that this was more like a pattern also, even though it was a little bit steep and more than 50% of of the the previous run. You see, a little bit risky, but considering that we have 1, 2, 3, we could have sold here on the breakout of the pattern. Maybe just put our stop loss here for 40 pips stop loss, and some point 23%. You could have been trailing it, could have taken you out for 1.5%. If you're a little bit lenient with your risk management, you could have gotten all the way down here. And we had another pattern here. If we couldn't get this entry here, okay, let's be realistic. Let's say this is volume, and the market came here. Let's say this was our volume. This was our volume, and the market dropped, came back here to test this volume. And then it was, pushing down. But then if you look at it and say that this is a pattern, that you are looking to sell, it could have been risky because this move down here, it was corrective. Then when we move from a correction to a correction, it's not really the best one. But let me say you could have taken it, considering that what we had is a correction. This is a correction moving into a pattern. Considering that, what you could have done is you could have been aggressive with your management. So by the time you got in 0.9%, you could have moved it to break even, because like obviously if it moves back to break even, then it's likely that it's not gonna drop, it's just gonna maybe tap you out. So you could have taken a break even there. We came in for the third touch, another one a little bit corrective but better than this one. So let me say you had 30 pips, some point you were in 8%. You could have walked away with at least, yeah, with at least 5%, and this was a trade too. Some point it was in 3%. You could have walked away with 1.5%. Another one here, 1, 2, 3, 1, 2, 3. I don't know if you could have gotten an entry here, but this is just not good to do. Like, I know we always risk 1%, but having an 80, almost 90 pip stop loss, this is something you don't want to do. So let me say you could have been left out with that one. No patterns within patterns. Imperfect though. You gotta find perfect within the imperfect. And say, obviously you're not gonna put it all the way there. Let me say you put it here. You could have walked away. Some point you're in 8%. You could have walked away with still 4% if you are trailing it like 50%. Another one here. Guys, it's all simple. It's all simple. Another one here. Oh, God. Not gonna go through all of them. And right now, if we get a pattern, it's just gonna get risky, like these small patterns, because we are down in the run. We are way below the run. I feel like it's exhausted now. It's probably gonna start forming some larger structures or change structure. Maybe it's gonna move in an uptrend, or maybe just form some, bigger patterns before it actually drops, getting our insurance within there. So yeah, we don't know. We just observe though. I was also looking at USD chef. And what I was looking for, something like this. Let me just go to the daily so I give you context what exactly is happening. So as you can see, we are in a downtrend. Impulse, larger correction, impulse, correction, impulse. So like maybe we are getting a correction here. We are getting a correction here to go, but this looks impulsive. So we are targeting these lows down here. So let's go to the 4-hour time frame. I think this is gonna be the last one, and then I'm gonna end the video here because I don't want it to be so long. With the fact that I haven't dropped a video in a very long time. So we broke these lows here. We broke these lows. You can see we broke these lows here aggressively, and the move was initiated from here. So this way we are targeting to be volume, and also we are breaking these major lows. This was a major low, so it can be more like a retest, but retesting in a form of retesting this volume. So when we broke it, it can even be here. So but this is our first one. When we broke it, formed another one here, but we obviously know that this is not a bigger volume because it's not breaking anything. Can be valid, but like we are looking at this right now and this. So 1 2 3, we connect these highs, connect these lows, and then put this here. You can call it an order block, you can call it a hook point, you can call it whatever, as long as it's an area of interest. So now we are targeting for the market to come here, potentially third touch, can break out, break back in, then for give us an insurance entry, or maybe not an insurance entry, give us like something like structure which we can connect and start looking for sales. Nonetheless, we can look for sales. We get an insurance entry here, or if we get an entry here. Right now I wouldn't want to be taking reversal entries here because we are not yet sure, and we can never be sure. This is a risk to this. Maybe the market is gonna come test this point before it actually starts dropping. So we're just being, you're not being aggressive. We're just being, taking things easier. And what else was I looking at? I was also looking at USD CAD. I think I was looking at USD CAD, but not really interested. This is a nice one. I'll make a separate video on this because this is very interesting. And yeah, I missed some trades here. I missed a trade on, is it KJPY? No, not KJPY. I was also looking at KJPY, and I missed this trade. Initially, I was looking for buys here, but then when it broke out, this was an impulse. It broke out, and then it was giving me a correction. So I noticed that now maybe it's time to sell, target these lows. So I don't know what I was doing. I think it was the time when I was taking a shower. My stop loss could have been above here, above the broken low. And I was targeting this for 3%, almost 4%. Now I could have been in this trade. Could have been in this trade for like 1%, 1.7% right now. With my stop loss probably somewhere here. Yeah, I could have locked in 1%. But nonetheless, it is what it is. Market goes without you. You don't chase it. Market is gonna provide a lot of opportunities for you. And I was also looking at oil. I don't really trade oil. I was just looking at it. Let's see, with all this Iran, USA, Israel attacks, prices skyrocketed on Monday. They jumped here. Now prices are going up, $77 per barrel. Man, that's crazy. When we're just at 67, like, let me calculate this percentage in percentage price range from here to here. So that's like a 14% increase in price. That's crazy. But yeah, guys, hope you enjoyed the video. Yeah,